Welcome to another Monday Market Update with Kristen Mason Coreas, owner of the Homes by Mason team. Apologize if there's ever a little lag. I never want to start before you can see me and hear me, and so I'm always waiting to get my visual up here. It takes a few minutes in the background for me to go live. Today is Monday, March 3rd, the first Monday in March, and I'm here to talk to you, as usual, about what is happening in real estate in Northern Virginia. Now, that said, again, I don't know if you've seen me before, right? Like sometimes I feel like a broken record, but that's partly because I want to make sure if this is your first time tuning in that you are most up to date. And for those of you who continue to watch me, bear with me as I update others who might not have been watching before. In our area, in the DC metro area, there is some misinformation out there. There's been some gloom and doom postings that the market in our area was crashing. That has not happened. The data does not show that, and I will share with you the hard numbers here. And what we look at first, we kind of start at a national view, and then we come down all the way to a hyper-local view at the end. If you stick around, I share with you the data specifically for the area where I do most of my business, Arlington, Alexandria, Fairfax, and Falls Church. So I've got that data that me and my team run each week by hand, manually, to give to you at the end. So we start again with that bigger view and narrow down to that hyperlocal view to give you the hard numbers. So stick with me till the end and you will see that information that does show perhaps some shift in the market, but not yet a crash, not yet the big crazy numbers that you might have heard out there. And I'm here to help you know the actual numbers and help you interpret that for yourself whenever necessary. So the most recent mortgage rate update as of last Thursday was for 6.76%, which, let's see, so February 20th. So that's slightly down. So yeah, slightly down from the week before and slightly down from the year before. So that's good news for buyers. That interest rates came down to around 6.76, right? So around 6.75. We've been hovering up and around 7, although we've stayed below 7 for 5 consecutive weeks. And so that's some relative stability in the mortgage rates. Now, it's good to have some stability somewhere because in our economic environment and political environment, especially here in the DC area, there's been a lot of kind of unknowns and uncertainties. So from a national standpoint, there were an increase in homes by 3.5%, homes for sale from December. That is normal. So we do have a seasonal trend. And so that's what I'm seeing in terms of the hard data. I am seeing the seasonal trend continue to do what we would normally see seasonally. But when we look at the year over year data, we are seeing some changes. So again, stick around and we'll talk more about that. So let's see. So an increase of 3.5 from December and a 17% increase from the year before. So again, when we look at week over week or month over month, we're wondering if the market is still doing what it seasonally does. And then when we look at year over year data, we're wondering if there's kind of a shift to pay attention to. And so the median home price actually was up from the year before, highest price ever for the month of January. So now that's national. So nationally, prices in general in our market, especially here in our market, tend to go up year over year. So that 396 number is definitely not the average price for a home in our area. That's the national median price for a home. Again, highest price for the month of January. So that's certainly interesting to hear. Market's not crashed yet as of January. And previous homes, so kind of a mixed information here. Previous owned homes, so versus new construction. So resale homes fell 4.9% for the month of January. However, up 2% higher than the year before. So normally you'd see more home selling in January. So that's different than the seasonal trend, but up from last year tells us that the market is healthier, more sales than it was the year before. Consumer confidence took a hit. The largest decline since 2021, blamed on rising inflation and the possible trade war concerns as related to possible tariffs. And in addition to that, jobless claims hit their highest level of the year. It's a short year right now, but a potential sign of weakness in the labor market. So certainly there are some shifts happening in our economy that we'll see how they play out and impact our housing market. In terms of our regional area, the Mid-Atlantic region that we are part of, which includes Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey, there were more new listings across the region by 3.6% compared to the year before, compared to 2024. And year-to-date listing activity is tracking close to what it was the year before. So an increase in new listings is not necessarily a bad thing. We've had not enough listings for a really, really long time. So that's, again, kind of, what am I trying to say? It's welcome news to have at least a slight increase in listings. Contract activity, however, is lagging due to possibly affordability challenges, and also I'm going to believe due to some uncertainty in people's jobs. So purchase contracts were up week over week, but lower than last year. So again, that seasonal activity is more typically week over week, but down from last year is not such good news. So median days on market is less. So although there's somewhat less activity, people are still acting quickly. So buyers in our area don't usually have a lot of time to sit on or think about their decision to buy a home. So narrowing into the DC metro area, this is including the inner suburbs as well as Loudoun County, Frederick, Montgomery, and Prince George's County. So again, seasonally, when you look at the right side here, week over week, this is what I would expect to see this time of year. Showings are up by 20% week over week. Purchase contracts basically flat. I would typically expect that number to be higher. Time to contract shorter by 3 days, and new listings up. Again, this time of year, more listings is what we typically do see, up by 22% week over week. Maybe that's a slightly high number. And list price up by 5% week over week. Active listings up, that's a small number, by only 4%. That's the total inventory versus just new inventory. And then year over year, we are seeing some things down. So down 10% in showings year over year, down in contracts by 8%, longer by 1 day year over year from time to contract, and then new listings and active listings up. Again, that's not horrible news. We've been wanting to have more inventory. Median list price is still up year over year, 2.4%. But these, I said, I think a couple of weeks ago, I said if we continue to see these numbers, showings and purchase contracts down, that may be the sign of a shift in our market of less buyer activity. So if listings continue to increase, which we've been seeing, and if buyer activity continues to decrease, then that's where we're going to have some more challenges in our market, and prices will probably fall because prices are a matter of supply and demand. So if, again, listings up, buyer activity down, then prices will probably follow. So our hyperlocal market, as I promised you in the beginning, if you stuck around to the end, this is data that my team runs. It's the most current, most local data for specifically Arlington, Alexandria, Fairfax, and Falls Church. And we run this data as of last Monday until yesterday. So we have here 411 new listings in our area compared to 389. So more new listings, not by a huge number, by 5.66%. So not a drastic increase in new listings week over week. However, this number is pretty big. So only 140 new contracts compared to 303 the week before. And normally this number would be going up. So this does give me some pause. Down 53.8% week over week. It's 1 week, so I'm not panicking yet at this moment. I'm not going to panic anyway, but again, being informed is important. So that's a big drop in contracts. Let's continue to watch that and to continue to see if those numbers continue to look like that. Year over year, down again by 52%. That's a big number. Demand to supply ratio, 34%. I don't know that I've seen that number that low since I've been running this. That means basically how many homes were left over compared to how many new listings came on the market. So the demand, again, ratio is only 34%. So only 34% basically of the new inventory got gobbled up. That leaves a lot of inventory left over. Again, I will reiterate, more inventory, not such a bad thing, but more inventory combined with less buyers, that could be a bad thing and could lead to changes and shifts and decreases in prices in our market, which remains to be seen. At the moment, we're not panicking. At the moment, the market has not crashed. We are continuing to sell homes. I actually, over this weekend, if you want to know what happens here on the ground at Homes by Mason, we had a coming soon listing, affordably priced for our area at $795. And I actually got that home under contract, sight unseen, above asking price, no contingencies. And frankly, I actually was expecting that home to get multiple offers and escalate above asking price. It's possible they might have gotten even more than what we got, but we got a really nice offer, again, nicely above asking price. So it does give my clients some certainty. They took that so that they can know and not have to wonder if that buyer activity continues to decrease. But that's what happened. And what I'm hearing from my colleagues is that another colleague that I talked to today who got a listing under contract had multiple offers and escalated higher than she thought that it would be. So that's part of what we're seeing here on the ground, that we are still seeing competing offers and escalating prices. That might change. So if you want to continue to know what's going on in the market, please watch me, tune in every Monday on YouTube or Facebook. I usually come on around 1 o'clock, was a little bit late today, but by 2 o'clock, I'm usually never late than 2. So if you don't want to watch me live, by 2 o'clock, you should see my update. And reach out to me anytime if you want to find out more about what's happening in the market and how it impacts you. You can call me at 571-210-1866 or text me there. Email me at kristen@homesbymason.com or get on my calendar using the link below. Thanks for watching, and I should be back next week. I'll be out of town in Florida this weekend for a hockey tournament. Pretty sure, yes, we fly back on Sunday, so I will be back here next Monday. Have a great week. See you next week.